The energy sector bouncing back today, the third best performer, led higher by Diamondback Energy and EOG. But the entire energy complex has been under pressure since President Trump's tariffs announcement. Oil on pace for its worst month since 2022. Natural gas faring even worse over that time. Joining us now is Bill Perkins. He is founder and managing partner at energy hedge fund Skylar Capital. And Bill, it's great to have you back on. That might be bad news for investors who are long, but also potentially good news for consumers. What does the moves that we're seeing in energy right now signal about the state of the economy and everything we've been discussing regarding trade policy?
Well, I think trade policy is pretty much driving the sentiment in both natural gas, energy, stocks, bonds, whatever there is. And it's quite difficult to understand what the long-term end game is. Are these temporary tariffs? Will we have a war going on for a year, 2 years? Or will the administration cut a great deal and exports from the United States will go up and the world will be more balanced? It's your guess is as good as mine on what that outcome is going to be. But the market has decided that we're going to bring prices down and pause. Chaos doesn't lead to confidence. And so the market is concerned about decreasing GDP, global GDP, which is decreasing crude oil demand, decreasing power demand. And so those fuels that fuel, the economy are much lower.
There had been some speculation, in part because as soon as we saw those tariff announcements from the Rose Garden with President Trump last week, nat gas initially popped, or at least I'll say performed better than other commodities. And there had been some sense that maybe perhaps it could be one of those first bargaining chips in line if you do start to see some negotiations, because LNG is something we can export and help reduce trade deficits with trading partners on. Your thoughts?
I think that could be a possibility. The natural gas fundamentals at that time, cash was very strong. Natural gas, we can have LNG type diplomacy. But overall, I think the macro picture of fear of a global economic slowdown kind of just overtook the crude oil market, the natural gas market, and kind of this risk-off environment. And so the prices when crude and nat gas went to a price where they would induce some more demand, perhaps be a little bit safer from further downswings, just in case we have a protracted tariff war and lead us into a recession or depression, for that matter.
The pressure we see on prices right now, what does it do to production? At what point do you start to see that come in?
It was interesting that WTI got right at the point where Permian would not grow and perhaps decline. And so that's a right around $60. You're kind of at a point where producers are going to go, well, okay, we're not going to drill into this environment, and the crude curve is backwardated. So we saw further out the curve $58, $59 out there, and so that would definitely be no growth out of the Permian, and that would be less associated gas associated with that. And so that was a very, very bullish offset to the uncertainty going on in the world. And generally, when there are uncertain times, are not necessarily good for business. And so that wasn't necessarily an irrational move.
How does this set us up? We're going into earnings season. And I know maybe you don't follow the equities specifically, but what do you expect we're going to be hearing in terms of commentary from some of the oil and gas executives as we do get results?
I think the word you're going to hear a lot is caution. Given that they probably don't have the predictability of what's going to happen with the global macro situation in terms of tariffs and what deals may or may not be cut, they're going to proceed cautiously, and they're going to let market signals dictate whether they're going to ramp up their rig and drilling program or not. And at current prices, I would expect them to cut back on some of those programs and exercise extreme caution on a go-forward basis.